We are looking live at shares of Palantir Technologies, ticker PLTR, just after the market open on October 29th. The stock is absolutely surging, trading at $196.32. That is a gain of $6.72 or 3.54% just in the first 30 minutes of trading. This move continues a parabolic run for the company, pushing it against its 52-week high and cementing its status as one of the most contentious and, for many, most profitable stocks in the entire market. The previous close was $189.60, so this is a significant gap up and continuation. The immediate expectation, seeing this price action, is that the market is finally, unequivocally accepting Palantir as the definitive operating system for artificial intelligence. The reality is that this price surge is happening in spite of near unanimous warnings from Wall Street analysts that its valuation has become completely detached from traditional fundamentals. The stock is moving based on a narrative of future dominance, fueled by a torrent of massive new contracts that are forcing even the skeptics to pay attention. The common belief is that Palantir is a buy-at-any-price stock to gain exposure to the defense and AI build-out. The deeper, more complex reality is that investors are now paying a premium that assumes decades of flawless execution, and the disconnect between the company's performance and its stock price has never been wider. What we are seeing today is the direct result of a rapid-fire series of announcements that confirm Palantir's strategic position. Just yesterday, CEO Alex Karp was in Poland, signing a letter of intent to cooperate on data, AI, and cybersecurity. The Polish defense minister explicitly stated, if there's a unique experience from the battlefield, it's Palantir that has it. This isn't a small trial. This is a nation on the front lines of NATO looking to integrate Palantir's systems across its entire military. This comes on the heels of the single largest contract announcement in the company's history, a staggering $10 billion 10-year deal with the U.S. Army. This provides an incredible baseline of revenue visibility. Concurrently, the Department of Defense expanded another existing contract by nearly $800 million. The expectation for Palantir was always that it would win government work. The reality is that it is now winning the foundational, decade-long contracts that position it as the entrenched incumbent. This government momentum is now being matched by the commercial sector, which has been the long-standing question mark for the company. The narrative for years was that Palantir was too complex, too expensive, and too black box for corporations. That narrative is being dismantled. Recent Q2 2025 data showed U.S. commercial revenue exploding by 93% year over year. The company's total customer count grew 43%, and its net dollar retention, a key metric showing how much existing customers spend, was 128%. This proves the land and expand model is working. The launch of its artificial intelligence platform, or AIP, is the catalyst. Companies are no longer just buying a data analytics tool. They are buying an entire operating system to build and manage their own AI applications. This was further solidified by the new strategic partnership with network provider Lumen. Palantir is providing the AI, and Lumen is providing the network fabric to run it, creating a connected ecosystem to help enterprises adopt AI faster. This is a franchise-like model, allowing Palantir to scale its reach dramatically. With all of this incredible news, many investors, especially on platforms like Reddit and X, are looking for a short squeeze. They see a stock running hot and assume there must be a massive contingent of short sellers betting against it. This is a critical area where expectations diverge from reality. Let's look at the actual data. As of the most recent reports, Palantir's short interest as a percentage of its float is incredibly low, sitting at just 2.23%. This is a negligible amount. Furthermore, the days to cover, which measures how long it would take all short sellers to buy back their shares, is only 1.26 days. This indicates there is absolutely no significant short seller pressure. The cost to borrow shares to short them is also minimal, at around 0.25%. What this tells us is that the bear case for Palantir is not an active, aggressive short attack. You can verify this data yourself by checking publicly available short interest reports from FINRA or looking at the borrow fee rates on most active trading platforms. The enemy for Palantir bulls is not a hedge fund waiting to be squeezed. The enemy for Palantir bulls is valuation. What's your take on the current short position? Is it a valid critique of its price or just market noise? The reality is that the smart institutional critique of Palantir has nothing to do with its technology and everything to do with its price. Analysts are not issuing hold ratings because they think the company will fail. They are issuing hold ratings because, as one firm noted, the stock is trading at a price-to-sales ratio of 136. This is multiples higher than its software peers. The market is pricing Palantir not as a software company, but as something entirely new. And 17 out of 25 covering analysts believe this premium is unsustainable. They see the stock as frothy and due for a correction, even as the business itself fires on all cylinders. This is the central tension of owning this stock. You are betting that Palantir will become one of the most important companies of the next 50 years, and you are willing to pay a price that reflects that belief today. This is why the upcoming Q3 earnings report on November 3rd is so critical. The market is anticipating another massive beat and raise quarter. The whisper numbers are high, with expectations for earnings per share around 0.17 and revenue near $1.09 billion. But the headline numbers are not what will matter. The market will be laser-focused on the growth rate of the U.S. commercial business. Can it maintain a near 100% growth rate? Any sign of deceleration could be punished severely, given the stock's current altitude. The second metric will be the adoption and monetization of AIP. CEO Alex Karp's commentary on the earnings call will be analyzed word for word for any hint of acceleration or slowdown in demand. This is a company that often experiences outsized momentum after its earnings reports, and the options market is pricing in a significant move. For those less familiar with the company's history, Palantir has always been controversial. It was co-founded by Peter Thiel and is named after the Seeing Stones from The Lord of the Rings. For nearly 2 decades, it operated in the shadows, serving the U.S. government, particularly the defense and intelligence communities. Through its Gotham platform, this is the software that reportedly helped in complex intelligence operations. The company went public via a direct listing, not a traditional IPO, which in itself was unconventional. For the first couple of years as a public company, the primary concern was its heavy reliance on lumpy, politically sensitive government contracts and its extremely high stock-based compensation, which diluted shareholders. The launch of its Foundry platform was the first major push into the commercial world, targeting complex industries like aviation, manufacturing, and pharmaceuticals. But it was the arrival of generative AI that provided the missing piece. AIP, its newest platform, allows organizations to securely use large language models on top of their own private data, creating the operating system that the bulls have long claimed Palantir would become. Looking at the institutional ownership, we see that the big money is involved, though with some disagreement. Vanguard, BlackRock, and State Street are the largest holders, as they are with most large-cap stocks. But recent filings show a divergence. In the last reporting period, Vanguard and State Street added to their positions, while BlackRock trimmed its stake. Notably, institutions like Norges Bank, Norway's sovereign wealth fund, and Fidelity FMR LLC made significant additions. This reflects the broader analyst split. Some institutions are willing to buy into the long-term growth story, while others are taking profits or reducing exposure due to the high valuation. Comment below what percentage of your portfolio is in AI-related stocks like Palantir. So, as we watch Palantir trade near $196, the expectation is for a clear, easy ride to new highs, driven by AI euphoria and massive government backing. The reality is that this is one of the most complex and expensive stocks on the market. The business has proven its technology is best in class, as evidenced by its recent string of must-have contracts with the U.S. military and its allies, and its explosive 93% growth in the U.S. commercial market. But the stock price has front-run this success, trading at a valuation that leaves absolutely no room for error. The upcoming earnings report will be the next major checkpoint to see if the company's execution can continue to justify the market's immense expectations.